I'm Philippa, CEO of Paradigm Norton, and this is Life Matters More, where we explore ESG, sustainability, and the future of business. Hello and welcome to Life Matters More, where we explore how people are using their money, work and influence to build a life and a world that truly matters. Today I'm joined by someone who has spent her career working in the midst of money, systems and impact. Her work has often been behind the scenes, shaping how capital actually flows and what it ultimately achieves in the real world. Alice Chapple is an economist, chartered accountant and the founder of Impact Value. She's been working in sustainable finance for over 3 decades, long before ESG became a mainstream conversation. She also developed the Sustainable Finance online course for the University of Cambridge's Institute for Sustainability Leadership and was the head tutor on the course. She's become one of the architects of impact investing, helping funds, institutions and investors think much more rigorously about what they mean by impact, how they measure it, and crucially, how they embed it into decision-making rather than simply reporting on it after the fact. She focuses on the systems, incentives and frameworks that shape behaviour in financial markets, because as we know, it's not enough for individuals to want to do the right thing. The environment they operate in matters enormously. So today we're going to explore what it really takes to align capital with outcomes that genuinely matter and what responsible leadership looks like when you're trying to do that in practice. Alice, I'm so pleased to have you with us.
Thank you very much for having me, Philippa. It's great to be here.
So, in the words of Julie Andrews, let's start at the very beginning. You spent over 30 years in sustainable finance. When you look back, what first made you care about the impact of money and not just the return?
I think it started perhaps on a visit to India when I just left school at age 17 or so. Went round India with an organisation at the time. It was called the International Voluntary Service. So it took me to some fairly remote rural places. Made me realise how very lucky I was to be born in a rich country, and made me realise how people manage to be resilient, to have good lives, even without very much. But it made me realise that life really isn't fair, and that there ought to be more that we do to try and spread capital to the places that need it. And so I guess that was the start of of my journey, if you like, of trying to find ways to drive capital towards places that need it most.
Okay, so you came back from India at, how old were you when you came back from India?
I was 17 when I came back from India,
yeah. Okay.
So it was just about to be 18, just about to start university.
Golly. And what did you do then? So you'd had this amazing experience, you had this life-changing experience.
Yes.
And you came back as a young 17, 18-year-old. What happened next?
Yes. Well, I started university then, and I thought that doing economics would be a really good way to sort of work out how the ills of the world could be addressed. Actually, economics, perhaps it's still the same, but certainly in my day, it was very theoretical. And so you learned a lot about graphs and about the maths behind it, but not really so much about how you properly drive change. And so my economics was a good grounding, but it wasn't really the answer that I was looking for about getting, how do we really make the world a better place? And so my career since then has been learning all the time about that, building on that foundation.
Yeah, so I want to move on to this word impact. So, you started Impact Value. So impact's a really important word. And it's a word actually that until I heard it used in the world of sort of sustainable investing, etc., I didn't think too deeply about.
Yes.
Okay, so I want to understand a little bit about how impact entered your world after you left university, after you studied economics. And when you hear impact used I'm not sure it's as mainstream as people who live in this world think it is.
Yes.
How is it misunderstood?
Yes, it's such a good question because it is used a lot and it's used in so many different ways, I think. I think what's been quite helpful is some sort of clearer definitions of impact that have come through in the recent past, particularly with the UK has got a new set of labelling, the sustainability disclosure regulations, where they've kind of gone down a very particular definition of impact and have said it has to be intentional. You have to have a clear way in which your organisation or your fund actually drives impact, and you have to have a plausible way in which your interventions actually do create real change on the ground. So that, I would say, was what we all mean by impact, what should be considered to be impact. It's real change on the ground, intentionally delivered. So, you are having a very specific strategy. You've seen that the assumptions behind your strategy are reasonable and that you are likely to deliver change. I think the other way that it's often used is a much broader way, isn't it? Where you've got, are you making positive impact or are you making negative impact? And a lot of investment strategies are talking about what is the harm you're avoiding? How are you avoiding negative impact? And a lot of the traditional environmental, social governance strategies, ESG strategies, are designed around, let's try and make sure we're not making any negative impact. But that is a very different thing.
Yeah, right. Okay, so because you're wanting to make actual impact on the ground, as you say, how on earth do you go about measuring that impact or lack of impact, if you like?
It's such an enormously difficult thing to do, and there are different answers to that question depending on who you're talking to. There are some who try to monetize that impact, so try and translate all of the different types of impact into monetary equivalents. So, how do you try and work out what the value of a forest that's being conserved would be? How do you make sure you value the fact that your healthcare solution is reaching people who have a life which is a much better life? So people try to bring those into financial terms, which is extremely challenging. That none of these things are very easily monetizable. The other way to measure impact is to have specific metrics that you measure alongside the financial return. So for your own particular investment strategy, it might be in energy, you might be measuring very particular real world outcomes around the amount of megawatts you've brought on, or the number of people you've reached with a new energy distribution strategy. For water, you might be looking at how many litres of water you've saved through a particular water management. So metrics which are not financial, but which are very, very closely related to the strategy, and you can track. One of the things I think we struggle with in the financial world is that a lot of strategies are about listed equities. And so the measurement of how a listed equity strategy has actually created impact is a bit challenging, because what happens, obviously, with a listed equity strategy is you're simply buying the stock of somebody else. So what actual impact on the ground does it have? You've got some funds that try and say, well, the equivalent that we have invested in these particular companies, they are having this real world strategy because they are putting in place various different things in the real world. So we will take a share of that. We will sort of measure our impact as a fund by reference to that underlying company. And that's tricky because you've not actually changed what the company is doing. So I think those are sort of some things that everybody's grappling with at the moment around how do we measure it in a way that's comparable across different strategies? How do we take into account that a potentially a listed strategy doesn't have real world impact unless you're engaging, changing things on the ground, or actually unless perhaps you're such a well-known fund that you're signaling to other people that this is a really important place to go, and other people pile in. So yes, a relatively long answer, but it's a really complicated question.
It is, and I have grappled with the same thoughts around secondary markets and primary markets, and how much, is it really impact? Are we really making a difference? It's a really hard thing, but I think it's a great question to be challenging ourselves with.
Yeah.
Hi, I'm Karen Sutton, founder of the Global Good Awards, and we're thrilled to be partnering with Paradigm Norton to bring you this podcast. We exist to celebrate the people and organisations out there creating real, lasting change in the world, and we'd love you to be part of it. If you think you've delivered something special, then find Global Good Awards online and consider putting in an entry or two. Now enjoy the rest of the podcast.
Moving on to, I'm always interested in motivation. And, you've spent a lot of your career designing frameworks and measurement systems. But at the end of the day, we've got humans at the middle of this. And I'm always really interested in that, the balance between people and profits and purpose, etc. So I would be really interested in understanding where you feel the motivation for this impact work comes from. Is it driven, but particularly in finance, is it driven by individual values? Is it just really good people who were seeded in companies? Or is it the system that they're operating in?
Yes. So I think that we know that there are many people who want to make a difference through their investments, and we know that there are many people who are trying to invest in alignment with their values. I think the system does prevent that. I think that there are many reasons why the system constrains that behaviour. We know that you can make more money often by doing things that are not aligned with social and environmental value. We know that after the Ukraine war, as the Iraq war comes in, oil companies are going to be valued much more highly, that people who are not investing in those things are going to, in the short term, have a lower return. We know that, for example, investing in some of the social media companies, if you hadn't been in those, the Magnificent Seven over the last 7 years, over the last few years, you would have found that you would have missed out on returns, even though we know that there are pretty devastating consequences for society from those. We know that they are not helpful in terms of carbon emissions, in terms of water, and so on. So we know that there are lots of things in the system which encourage the status quo, really, encourage people who are looking quite sensibly for good financial returns, are taken down a route that is not necessarily in line with social and environmental values, and not necessarily going to deliver the best outcomes for society or the environment. How does that change is the biggest question, isn't it? So the motivations of individuals, I think people can select strategies that don't fall into that trap, but in the short term, they probably will not outperform. So thinking long term is one thing, knowing that actually the system has to correct over the long term. It's a sort of tautology that these investments that will address climate change, will address water problems, will be part of the circular economy, will all have to be the answers ultimately, because we don't have enough world to deal with things otherwise. But in the short term, we know that the system does not deliver financial returns for those in an outperforming way. So I think that we are trapped in a system that doesn't, it's the point of your podcast, that doesn't value the things that matter. It doesn't value life as much as it values those short-term financial returns.
Which begs the question, if you could change one thing about the financial system as it currently operates, what would you change?
So, assuming that I can really wave my magic wand, and it's something that we know we've all worked on and we're trying to change, but is very, very hard to do, it would be about trying to find that clever way of embedding social and environmental value into the financial models that we all use. So it's recognizing that we miss out on so many parts of true value in the financial models we're using in the system, whether it's, how people are dealing with their carbon emissions, whether it's how people are dealing with people. There's so many elements of how people value a company that are simply the financial and not these other elements. So my wish would be we would identify some way without just thinking we have to monetize these things, because money is not a very good way to measure, that we could somehow take these things properly into account, so that, for example, a company that does cut down forests is paying the cost of that in a way that prevents it, because there's an opportunity cost of using the forest in a different way, or genuinely is trying to find a way to pay for the ecosystem services that those forests provide, rather than cutting them down. So there are so many different ways in which we could value things better. That would be my wish, that we would be able to embed that in our way of the financial system operating.
Yeah. I mean, I think we are starting to see the companies who are able to future-proof come good. And there's some really interesting funds out in America at the moment, property funds who are looking at builders or companies where they're building buildings to take account of heat waves, to take account of earthquakes, to take account of floods. And sadly, that does appear to be
absolutely
creeping into how well a company performs if they are future-proofing.
Yes, absolutely. And I think there's something about needing to be future-proofed, so that there are absolutely some strategies where we know that the world around us is changing. I mean, it's changing because of the climate. It's aging. So a lot of strategies will be more resilient in the face of those macroeconomic trends, those global geopolitical trends, and so on. So you've put your finger on a really good example of where a strategy is going to outperform, because these events that are coming from, whether it's climate events or conflict events, are going to be affecting the value of that business. And I think that's really important that people recognize that any organization that looks at those things carefully is likely to be better future-proofed. So that's I 100% agree that is going to be a way to outperform in the future. I think that what is not necessarily going to happen, unless we find ways to value it better, is that some of the things that aren't immediately going to impact on people's profits are not taken into account. So a food company, for example, with its supply chain into places which are affected by drought or affected by flood, is going to have to adapt in the same way that the construction company that you talk about is going to have to adapt. A company, for example, that could move its supply chain or could be much more flexible about where it gets its raw materials, can exploit one area and then move on to a different area, knowing that it can kind of move around the world to depending on where climate is happening. So I think there's a difference in my mind between the companies that have to future-proof and then ones that are trying to find a way to improve the situation and trying to find a way to create conservation opportunities or create opportunities for people, which aren't necessarily going to be part of their resilience. They're just part of trying to create impact. And there is a difference between those two things.
Mm. Okay, so I think most of our listeners are probably not the CEOs of the big social media companies. They may well be CEOs of smaller companies who are listening to this because they genuinely want to do the right thing.
Yes.
What do you think that CEOs of companies who genuinely want to do the right thing might be underestimating? And how hard is it in practice to actually do the right thing?
Yeah. I think I'd say there are two things particularly, and they're the two things that I think have been challenges for the ESG investment strategies too, which are on the first is, how do you try to build in all of the things that you want to do around managing social and environmental harm and ensuring you don't create harm, and at the same time making short-term returns for your shareholders. So this is a challenge that all of your CEOs, all of the CEOs that I engage with, are going to be really struggling with. And it's the same thing that political leaders are struggling with. The cost of living, they know that they have to address climate change. They have to address various elements of social unrest. But the cost of addressing these things and the cost of living implications are something that are really hard to embrace. So I think it's the same at the political level as it is at the company level, really, sort of having that challenge of short term. We know that these things are not going to be easy to sell, if you like. And I think going back to the point you made before, I think some CEOs will be managing supply chains or products that need to be thinking about this now because they aren't resilient otherwise. Others will be needing to think about, well, what on earth can I do to try and build a product that is trying to make a positive impact, but potentially isn't, it has cost implications. So if I can get away with cutting a forest down because it's cheaper, because that's going to mean that the furniture that I build is that much easier to sell, would I do that? I think in the past, we used to think that consumers would be the driver of behavior. So the CEOs could sort of say, thank goodness for that. I can do the right thing because my consumers are going to ask for things which are sustainably produced or ask for things that are managed with a workforce that's well looked after. I'm not sure we can trust that at the moment, partly because people feel very constrained. They feel they're not, their cost of living is increasing. So whether it's food, whether it's furniture, whether it's clothes, people tend to go for the cheaper options. And that's often because they feel that it's too expensive to go for the more sustainable ones. So CEOs, I think, have to make that choice of whether you can brand a product in a way that appeals to consumers as something that does have these values at its heart. There are obviously good examples of products that have managed to do that. Patagonia is often cited as one, but there are many others, and I think that's one option. The other is there are some very clear things that can be done: energy efficiency, more efficient use of materials, which automatically have a benefit in terms of cost. So at one level, there's going to be a benefit to the cost of products through being more sustainable. But I think if one looks at most of the interventions that one might make, it's possible to make cheaper products by being unsustainable, and the consumers may not pay the extra. So this is where the biggest challenge, I think, lies. I think the second one, if I may, Philippa, is sort of almost the opposite, which is that if a business decides they are really going to be standing on this brand, this values proposition, it's then demonstrating to the consumer how they have done that and what that actually has meant. Going back to the point we discussed about measurement, sometimes it's really hard to prove that your product is better than others, and there's a lot of skepticism out there about greenwashing, about companies just pretending that they're doing something when they're not, or overstating it. So that's the secondary challenge. So navigating between the first challenge of, it's cheaper not to, and the second challenge of, even if you do it, it's hard to measure it and prove it, is a hard sell. It's a hard channel to navigate, I would say. There are people who are doing it, and I think they do get their reward often, but it's not that easy to do.
Sure. Okay, so one of the ways that a company might do it is to apply for something like the Global Good Awards.
Yes.
You are a judge on the Global Good Awards. And And I guess you see a lot of companies, those really great companies that you're talking about there, who are really trying to be the same on the inside as they are on the outside and do good in the world. What, in your opinion, separates those who are genuinely creating impact from those that you spoke about there, who are just creating a compelling story?
Yes, I mean, and that, as you say, is really what the Global Good Awards tries to unpick. We try to get to the bottom of what is the real change that an organisation would be making on the ground. And I think what we're trying to do through the Global Good Awards, and the Global Good Finance Awards had its inaugural year last year, as you well know. Paradigm Norton did very, very well in those awards, but trying to really get to the real world outcomes. So, for example, the two finance trailblazers that won in 2025 on the investment side. So setting aside the sort of the systems side, but this investment side, were, for example, Octopus Energy, which had a collective platform enabling people, anybody, to invest in renewable energy, community energy. So it's actually, you could see that this was not just an investment proposition, but also a kind of way to get people more engaged, a mindset proposition as well, in we can be investing in these community platforms. We can put our money to work in a way that really does make a difference. And that was to us a really good example of real world change. Another one that we awarded was Nattergal, which is a natural capital provider. What they're trying to do is make nature investable effectively. So it's difficult for all the reasons we've discussed around how do you value the benefits that nature brings. But what Nattergal are trying to do is to get investment into nature in a way that actually could be part of an investment portfolio. Which again is a really good example, I think, of real world impact. So what we're trying to do is identify organizations and initiatives that are great on their own, but also actually have a bigger impact on the system. So the fact that Octopus Energy can illustrate you can make money from community energy, you can be part of the solution, is a great replicable, scalable idea. Similarly with Nattergal, that nature finance thing. And for Paradigm Norton, the reason why we felt so strongly about the work that Paradigm Norton is doing is, I think, that there is such real world implications from being able to give clients that transparency over the choice they can make on their investments. So many investors are not asked, are you what would you like your values to deliver in terms of your investment strategy? And so, of course, the investment strategy does not follow them. And so the default option, which goes to the short-term financial returns, is what's delivered. What I think financial advisors that are doing a great job, like Paradigm Norton, are doing, is saying, actually, there's something more that we should be talking to our clients about, so that whatever choice they decide to make is entirely up to them. And there are lots of different ways in which they can decide to do impact, to deliver impact in their strategies. But we provide them with that information. And that's an enormously system changing piece of work, I think. So it's I think reaching retail investors with those choices and making sure that they are aware of those choices is a way to break into the system we talked about earlier and sort of say, how do you want your values to be aligned with your investment?
Yeah, I am incredibly proud of what we're doing here. And honestly, we have so many exciting conversations. People want to talk about this. They want to invest in line with their values, and so they don't just put their pension in a little box and say, well, I'm going to cycle to work and recycle my plastic bottles, but I have to forget about that because that's about long-term survival. It doesn't have to be that way, and we can and we should be having better conversations with our clients.
Yeah.
Absolutely.
Yeah. And it's such a big part of the system to try and give people that choice, I think. could be a real game changer, I think, especially if people are asked, where along that spectrum of impact are you wanting to be? Because if people are deliberately wanting to allocate some part of their portfolio to that very deliberate, intentional impact, then that can be very powerful, as well as obviously with some of their investment wanting to avoid harm. So it's giving people a sort of vision of that spectrum and how far they want to go down each part of it.
Yeah. Yeah. I mean, I don't know if you saw the FCA survey where they said 82% of the people that responded to the survey said they wanted their money to do some good. So,
it's incredible, isn't it, when you ask people how much of a response you get? Absolutely.
Yeah.
Absolutely.
Let's give them that opportunity.
I guess there is also something around. I don't know if you remember some years ago, Hugh Fearnley-Whittingstall did a sort of thing about free-range chickens. So outside the supermarket, everybody was showed pictures of battery farm chickens, and they said, no, I'd never buy one of those, and so it was sort of similar percentage. And then they followed them into the supermarket. And when they looked at the different prices, they were like, oh, I know I said outside that I wasn't going to ever buy a battery chicken, but, I've just, it is a lot cheaper. So I actually am. Mm-hmm. So I think that gap between say and do is still there. We need to be really clear, don't we, about capturing those people who say we really want to invest in line with our values, and then being really clear about the how as well, so that they're given what they need in terms of being able to deliver on that, which is, I think, exactly what you're doing at Paradigm Norton. You're offering them those choices.
Yes, and it isn't actually, our responsible portfolio has performed in exactly the same way as the traditional. So there isn't that gap between exactly. returns, which is great.
Exactly.
At Paradigm Norton, we believe money matters, but life matters more. That's why we put people, purpose, and long-term impact at the heart of financial planning. As an employee-owned B Corp business, sustainability is central to how we think about wealth, helping you invest in ways that support responsible business practices. So by working with us, you can feel confident that your money is working for your future and the world you want to live in. Not all of our listeners are CEOs. Some of our listeners are young people who are just, as you were when you came back from India, embarking on their career. And I kind of want to spend a few minutes talking to them,
Yes.
Particularly those who are early in their career, coming into finance. They want to make a positive difference. What would you encourage them to hold on to?
So I think that finance is the thing that underpins everything. So that's why I went into finance. I went into finance because I could see that it was what would be most likely to change the world if we could get it right, because everything depends on it. So I would say that if people are interested in finance, there's a good reason for it to be an agent of change. I would say that there are so many great people working on trying to find solutions to some of the problems that we have been talking about, whether it's climate change or it's biodiversity loss or it's poverty in Africa. And lots of people doing it in quite a specific fund, a way that's in individual funds. So some of that would be funded through family offices and foundations. Some of it would be financed by institutional investors in particular vehicles, but individual funds, whether they're working on healthcare, renewable energy, water, plastics, are doing phenomenal things. And so that you would be able to find really exciting places to work which are directly delivering change. I would say there's a sort of second part of that, which is, at the same time, we can't ignore the fact that the system is broken and needs to be mended much more fundamentally than just doing individual funds, which are great but need to be scaled up and really won't scale up with the urgency we need. So I would say to people, do those things. And this is sort of how I manage my day, which is spend some time on things you can really see happening, and then some time on thinking, what are the bigger system change pieces that need to be happening? So policy and regulation needs to change. Pension funds need to be kind of talked to, just brought into a conversation about allocating at least some of their investments to impact. That is going to be, with the wall of institutional investor money that is available, that is going to create a massive change. So we need to keep working on how that makes sense for those institutional investors. What are they going to move? What's going to make them change the way that they invest? And it's partly about the resilience that we talked about earlier. It's how do you have at least some investments that are trying to prevent the damage that will otherwise affect all of our investments. And it's partly about just wanting to be able to show that they have a positive impact on people or the environment. So lots of institutional investment money needs to move. And so while working on the funds at the grassroots level is great, there's also some parallel conversations that have to happen at the institutional investor level. And then I would say also just thinking about how engaging retail investors is a big part of the story as well. So I think I wouldn't discourage people from going into finance. I think it's definitely worth going into, but aware that the system change needs to happen in parallel with these great individual activities and initiatives.
One of the things that comes out repeatedly on my podcasts is the power of asking good questions. Because if people aren't asking good questions, then the board aren't hearing that people are asking good questions.
Yeah.
So would you add to that advice for our young people or even our CEOs and encourage people just to ask the question, what are you doing on net zero? What are you doing with your supply chains? I would like to see some evidence, some demonstration.
It's such a good point. Yes, absolutely. Absolutely. And I think that if somebody who really wants to be working in an area aligned with their values doesn't ask those questions at the interview stage, then they could be surprised and caught short when they are in an organization that actually doesn't follow through. And I think it's such good advice to ask the right questions at that point and to continue asking them while you're in an organization too, because it's not that, one wants to keep on making sure that it's the right place to be. So, I think that's really good advice as well. Sort of challenge your organization to come up with the real world impacts that they're trying to make and the motivation behind it.
I mean, for me as a CEO, it's really powerful when my people say, Philippa, what are we doing about this? Why aren't we doing this? Yeah. I'm interested in this. Can we do this?
Yeah.
And often it will be stuff that I just don't know about.
Yeah.
And I'm delighted that they've asked a question. So I'm a big fan of encouraging people to ask questions. Okay.
Yeah, fantastic.
We've had a great conversation. I want to finish on a positive note. So when you think about all the work that you've done and what still needs to change, what gives you hope?
I think all the people that are working in this space who are doing awesome things is definitely what gives me hope. I think what I've seen, it's been a bumpy ride over the last 35 years, to be honest. It was very slow to get to a point where one thought I was having any traction at all on climate or on biodiversity loss or on even poverty reduction. And we've still got a lot of difficulties of getting people's attention. But I think it's not so much now the why. I think the why has sort of been answered. People understand the why around climate and around biodiversity loss, but it's more the how. So what gives me hope is that people are really trying to find those practical solutions. So I think there's a lot of headwinds, as we know, and the world is a difficult place. But we have even in the States, we have individual states that are very busily doing work on climate, work on the sort of the woke agenda that has become inappropriate at the US government level, is still being done in the individual states. Companies are still behind the scenes doing a lot of work on the environmental and social impacts, even though it's now become less of something that governments are seen to support them on. So I think that momentum is still there, even if the visibility for the time being is lower. So that gives me great hope. And I think that, to be honest, there's a lot of the work that's going on behind the scenes will scale up, and so the pension funds that are allocating to impact will find that that's a really good way to explore new opportunities. They'll find that there are growth opportunities in a lot of these impactful areas that will provide outperformance. So when we talk about the system not combining returns and impact, there are lots of good examples, and you provided examples too, but there are lots of good examples where you can see impact and financial return working in parallel. And the more that we can highlight those and emphasize those, the better we'll be. I think at the same time, there are plenty of places where risk money that is prepared to take risk needs to go to de-risk the people who can't afford to take that risk. So, for example, we're seeing a lot of really good co-investments by either family offices and standard investors, or government and standard investors, which are sharing the risk in a way that drives more capital towards these things. And I think that clever ways to combine different pots of capital, where some people go, well, I really need to see the impact, and I'm prepared to de-risk the bulk of the money that has to be financial returns that are market driven. That can combine a whole bunch of new flows as well. So I think you're seeing innovation, you're seeing certainly awareness there, you're seeing products, and you're seeing brilliant people doing brilliant things.
Wonderful. Thank you. Alice Chapple, economist, chartered accountant, founder of Impact Value, judge for the Global Good Awards. I have much appreciated our conversation today. It's difficult stuff, isn't it? It's hard stuff, but I love the fact that you're rolling up your sleeves and grappling with it. So thank you so much for being a guest on my podcast.
Well, thank you very much for having me, Philippa. I've really enjoyed our conversation.
And if you have enjoyed listening to the podcast, then please subscribe, tell your friends, send this over to people that you think might be interested in it. And above all, keep asking good questions.